Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Today we are going to cover May 2nd week banking and finance awareness news. Moving to the first news. The first news is about SEBI. The SEBI has told that the minimum investment into the securitized debt instruments will be rupees 1 crore. Okay, they have told that the minimum investment into this SDI, that is securitized debt instruments, is 1 crore. Now, what is this SDI, securitized debt instruments, securitization? Everything we will learn in detail with an example. Okay, say there is a customer A. He has visited a bank X. Okay, so he has requested for a home loan. The bank has provided the home loan also. So the amount has been credited, and that person has bought a house and that property papers. If you see, that is mortgage to the bank. Okay, the house, if you see, that will be in possession with the person. The person will be living in that house, but the papers, that is the property papers, will be with the bank. Say suppose this is the vault of the bank. Okay, and here all the property paper of this person A is stored here. Okay, similarly there is another customer B. He has also requested for a home loan. The bank has provided the home loan and the property paper is stored in this vault. And there are multiple persons like that who have requested for the loans. Okay, the same procedure happens and the property papers of those people are stored in this wallet. And say this loan, total home loan has been given by the bank is totally worth of 100 crores. So totally 100 crores worth of loan has been dispersed by the bank X to various people for the housing purpose. And all the property papers of that house are stored in the vault of this bank X. Okay, it is safely protected in the bank X vault. Now what happens is that another person comes in and he asks for the housing loan. You have given so many loans. Similarly, I think even I am eligible, so give me a housing loan too. But unfortunately, bank X does not have any money. Okay, the bank X runs out of money. Okay, this is just a hypothetical situation I am talking about. Okay, so bank X runs out of money. The bank X does not have any money. Next, what happens is that bank X thinks of an idea and it appoints a special purpose vehicle, SPV. Okay, now what this special purpose vehicle does is that now if you see, the bank has lots of property papers, right? They are all very valid property purpose. Okay, but what happens is these are not liquid form, that is they are illiquid form. They cannot be transferred into you can't give a property paper and get back money, right? So the bank is saying that we'll try to make liquidity, we'll try to create liquidity from these papers. So what do? We will appoint a special purpose vehicle. Okay, so this bank, if you see, it is also called as the originator. Remember the names, this is also called as the originator. What they do is they appoint a special purpose vehicle. Okay, and they will provide the access to this all these properties. All these properties, they will tell, use these properties, I'll transfer the property papers to you. Using that, you create something and give me money. So now this special purpose vehicle will have access to these property papers. What the special purpose vehicle will do is, this special purpose vehicle will appoint a credit rating agency. Okay, a credit rating agency will be appointed by the special purpose vehicle, and all this mortgage properties, all the papers of the mortgage properties, everything will be checked, all the loans and also the properties will be checked, and a rating will be provided. Okay, a rating will be assigned to these properties. Next, what the special purpose vehicle will do this, it will create securities. Securities are nothing but bonds. Okay, out of this mortgages, this will create bonds. Okay, and the bonds rating will be somewhere AAA or AA or A. Okay, that rating will also be provided by this credit rating agency. I'm telling you once again, I'm repeating it, don't get confused. Okay, now what happened? Bank has given 100 crores rupee of loan to various customers. Housing loan has been provided. All the housing paper properties are with the bank X vault safely. Another person comes and asks for loan, but unfortunately bank X does not have money. So in order to get money using the property papers, bank X thinks of an idea. It appoints a special purpose vehicle. The special purpose vehicle has now access to these property papers. Okay, so what this special purpose vehicle does is, it creates bonds that are backed by these property papers. I'm telling you once again, it creates bonds that are backed by these property papers, and the credit rating agency assigns the rating to the bond. Okay, each bond will have different rating. See, I'm telling you, there are like so many housing loans that have been provided. Each housing loan will have a different tenure. Maybe this A has got a tenure of 10 years and B just 5 years. So depending upon everything, depending upon the borrower capacity, everything, the bonds also will have different rating. Higher rating means lower risk, which means the return, that is the interest that the investors will get will be lesser, and lower rating means higher risk, and also the interest that the investors will get will be more. Okay, so special purpose vehicles, they have created bonds that are backed by these securities, that are backed by these property papers. So these bonds will be released, will be open to the market, and investors will invest the money. Okay, there will be a lot of investors and they will invest their money into these bonds. In return, what will the investors get? They will get the interest, right? Depending upon the risk of the bond, depending upon the rating of the bond, the investors will get the interest accordingly. So investors will invest. The money will go into special purpose vehicle, and this money from special purpose vehicle, it will go to the bank. Okay, now bank, they have transferred this illiquid assets into liquid assets. Now they have got money from the special purpose vehicle. Using that money, now they will give loan to this new person who came and asked for a housing loan. So this is how the securitization is done. So by securitization, bank can transfer the illiquid assets into liquid assets. So it is a win-win situation where investor also gets an option to invest their money. Okay, and also bank will get money immediately. So this is what is called securitization, and these bonds or securities are called as securitized debt instruments. And regarding this only, SEBI has now released certain rules that we are going to see in detail. So operating experience. So I've told you, right, the banks are the one who are the originator. So they require minimum 3 years operating experience. So this is for the originator. Previously I saw it is the banks or the NBFC who have that mortgage properties papers. So they are the originators. They should have minimum 3 years experience for issuing the securitized debt instruments. Next is rupees 1 crore. So minimum investment, if you see, like mutual fund and all you have, right? Minimum investment is 500 or 100 rupees. And portfolio management services, PMS also, minimum investment is either 40 lakhs or 50 lakhs. So similarly, in securitized debt instrument also, the minimum investment is 1 crore. And this is open for at least 3 days and maximum of 10 days. So within these days, the investors can subscribe to these securities or bonds. So this is to be issued and transferred only in demat form. So it should only be transferred in the next point is originators are now required to hold a minimum 10% of the securitized pool or 5% in the case of receivables with a maturity period of up to 24 months or 2 years. So what does this mean? The previous example we saw that rupees 100 crore worth of mortgage backed securities that was securitized. Okay, they were converted into SDI, securitized debt instruments, that is called as securitization, and sold to the investors. In this case, out of the 100 crores, what this point tells that the originator, that is the banks or the NBFC, also called as the originators, they have to hold minimum 10% of the securitized pool. So here the securitized pool worth is 100 crores. So out of this, they have to hold at least 10 crores or 5%. That is rupees 5 crores if the tenure of the loans is lesser than 2 years. Okay. If the tenure, that is the maturity period of the loan, is lesser than 2 years, then they have to hold 5%. If it is more than 2 years, then they have to hold 10%. Remember this number. Okay, lesser than 2 years means 5%, more than 2 years means 10% out of the total securitized pool. Next is SEBI has further classified that loans with maximum tenure of 2 years must be held for at least 3 months before securitization. So in previous case, we saw that the mortgage-backed securities, right? Similarly, there is also asset-backed securities, even personal loan, which is not backed by any asset or any mortgages, that can also be converted into securitized debt instruments. Okay, so we'll take an example of the personal loan itself. So in this case, if the personal loan, okay, the total tenure of the personal loan or the maturity of the personal loan is 2 years, then you have given the money, you have the personal loans. You cannot immediately convert it into securitized debt instruments. What does this securitization means? Converting the loan or the asset-backed securities or the mortgage-backed securities into securities debt instruments. Okay. So you cannot convert these personal loans immediately into security debt instruments. You have to wait for at least 3 months. Okay, and then only you can convert them into security debt instruments. The 3 months waiting period is to observe how the borrower is making repayment. That is the main reason for this waiting period of 3 months. Okay, SEBI has further classified that loans with a maximum tenure of 2 years must be held for at least 3 months before the securitization. Similarly, loans with tenure of more than 2 years must be held for minimum 6 months before securitization. So, two things: below 2 years means 3 months you have to wait, and above 2 years means it is the double, that is at least 6 months you have to wait. Then only you can continue with this securitization process. Next is SEBI has also introduced an optional cleanup call for originators, which will allow them to repurchase maximum 10% of the original value of the assets. So what does this mean? The first case we saw that rupees 100 crore worth of mortgages were converted into security debt instruments, right? Say suppose the investors have invested and the tenure of most of the bonds had been reached. Okay, the tenure or the maturity of most of the bonds has been reached and the repayment to the investors has been done. Say suppose 90 crores repayment has been done. The remaining securitized pool is just 10 crores. Okay, 100 crores were converted into security debt instruments. Investors have bought these instruments and the repayment is also done. That is, the maturity of the bonds have also reached. The repayment of 90 crores have been done to the investors. The remaining value now is just 10 crores. Okay, the pool, that is securitized pool value, is just 10 crores. Now the originator will tell that okay, it is only 10 crores. Instead of managing the 10 crores, instead of giving administration cost, the staff cost, over cost, instead of doing that, I will buy the 10 crores and close the securitized pool itself. I will pay the 10 crores to the investors and close this itself so that it will be easier for me to manage. That is called as the cleanup call. Okay, because it will consider like okay, there is administration cost, this is that, this cost is there, that cost is there. This is becoming even more harder for me to manage. Instead of that, I will buy back just 10 crores is there, right? So I will buy back this and close it for all. Okay, that is what is called as this cleanup call. Okay, so this repurchase, if you see, it can be done only maximum up to 10%. So here we saw that 100 crores is the total value of the assets. So 10% means only up to 10 crores can be done, can be repurchased. Suppose the remaining value of the pool is 12 crores, then that cannot be done. Okay, so maximum is only 10%, that is maximum repurchase that can be done is only 10 crores. Okay, this is an option given to them. It is not like compulsorily you have to buy. If the bank feels that it is very tedious for them to manage this small amount of pool, they can buy back the money. That is, they can repurchase that value 10% of the original value of the assets. This is an option given to the banks or the NBFCs. I hope you have understood the securitization process and also the new rules that have been formed by the SEBI. It is very, very important, especially from the SEBI exam point of view. Please remember each and every point.
We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our Careers Cloud to access this course. Once you have logged into our app, you can go and click this All Courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the Details tab, you will be able to see a brief about this course. And under the Part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously and this will be completed within 2 months. Under the Free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about an RBI report. The Reserve Bank of India has released a report called Data on Services Trade for March 2025. So if you see in that, the data of the exports has been mentioned. So in financial year 2025, the entire exports, this includes both goods and services. Okay, goods are that are visible for our naked eye, like for example, laptops, the computers, mobile phones. So all these are toys. So all these are goods. Okay, and services all comes under like insurance and even computer services, the software services. All this comes under the services category. So this, if you see, this is the overall exports, which includes both goods and services. It is around 825 billion. You don't have to remember correct number, 825 billion. And in financial year 2024, if you see, then it was 778 billion. So around a 6% increase was observed compared to the previous year. Overall export, if you see, it has grown by 6%. Remember this value 825 billion. It is very, very important because this is for the entire financial year. And if you see only for the services part, it is 387 billion compared to the previous year. This is for financial year 25 data and this is financial year 24 data. So compared to the previous year, we have grown by 13% in services. So overall 6%, services part alone we have grown by 13%, and the major contributing services for the growth, if you see, telecommunication, the software services, the computer services, the insurance, banking. So these all played a vital role for the services export to grow at 13%. Next is the goods and goods exports, that if you see, that has grown by 6% again. So overall goods export, if you see, 374 billion for financial year 25, and financial year 24, if you see, the overall is 352 billion. So remember the overall goods and services exports, that is 825 billion. Then for services you have to remember 387 billion, and when you subtract both you will get the goods exports. Okay, so just remember these two data. Automatically when you subtract you will get the third data, that is the goods data. The overall exports and the goods exports alone, they grew by 6%, and the services, if you see, they grew by 13%, more than double. Next is about the GDP forecast. So the S&P Global has projected that the financial year 26, that is India, will grow at 6.3% in financial year 26 and 6.5% in financial year 27. This is lower compared to the previous projection. Okay, so we don't have to remember the previous projection now. Just remember that now it has been lower, and it has cited that the reasons for this lowering of this GDP projection is the obviously the geopolitical tension, the war happening between Russia, Ukraine, and also the trade tariff that has been imposed by the US president. So these are the various reasons for lowering the GDP projection. Similarly, the global projection, okay, the overall world projection, if you see, for 2025 it is 2.2% and 2026 it is 2.4%. The other organization projection, if you see, IMF has projected that India will grow at 6.2% for financial year 26 and World Bank 6.3%, Reserve Bank of India 6.5%. You have to remember the financial year 26 India's GDP projection by various important agencies like S&P, IMF, World Bank and RBI, and also the global projection is also equally important. Please remember this numbers. That is why I am provided the other organization projection also. Remember financial year 26, S&P 6.3%, World Bank also 6.3%, then IMF 6.2%, Reserve Bank of India 6.5%. Next is again Moody's GDP forecast. So it has projected 6.3% for 2025, and for 2026 it has projected 6.5%. Similarly, for the world it has projected 1.9% for 2025 and 2.3% for 2026. Remember the numbers, it is very, very important. In the previous news, we saw that S&P Global, IMF, World Bank and RBI, so they had all projected for the financial years. Okay, so financial year 26 we saw, right? For RBI 6.5% it has projected for India, then IMF 6.2%, S&P and the World Bank has projected 6.3%. This is all for the financial 26. But here if you see, this is for the calendar year 2025 and calendar year 2026. For calendar year 2025 6.3% and calendar year 2026 it is 6.5%. Know the difference. Okay, for these countries, sorry, by these organizations, it was everything was stated in financial year terms, but this Moody has stated it in calendar year term. This is for India I am talking about. Next is ZacPay. It is a subsidiary of the MobiKwik. Okay, MobiKwik subsidiary ZacPay. It has received this final regulatory approval. Final regulatory approval, that is COA. That is nothing but Certificate of Authorization from RBI to operate as a payment aggregator. Okay, there are two things. One, payment aggregator. The other is payment gateway. So people get confused between two things. Remember, payment gateway is nothing but a technology service is being provided here. So in payment gateway provides a technology service where this card information, the customer's information, everything is transported securely. Okay. And payment aggregator, it collects the payment. Okay, it collects the payment on behalf of the merchant and then transfers the payment to the merchant. So it collects the payment on behalf of the merchant from the customer and then it transfers the payment to the merchant. So this is the work of the payment aggregator and this is the work of the payment gateway. Now ZACPay has received the final approval to operate as a payment aggregator. Next is about the penalty that has been imposed by Reserve Bank of India on 5 major banks. So we'll cover one by one. First is ICICI Bank. The penalty imposed is 97.8 lakhs. And the reason is failure to report a cyber security incident and also for charging late payment fees on credit card holders without issuing credit card statements. Okay. So you have to issue credit card statements and then only you can put the late fees. Okay. Without issuing the credit card statement, this late fees was imposed on the credit card holders. Next is Bank of Baroda, 61.4 lakhs, and the reason is failure to credit interest to certain inoperative accounts at the required intervals. So on regular interval, this savings bank interest rate has to be credited to the bank. Okay, to the bank accounts. In certain banks, if you see, they will credit every month. In certain banks, they will credit once in 3 months. That is quarterly interest payment. So that you have to credit regularly. But if you see in inoperative accounts mean they have not been in operation for 1 year or 2 years. So in those accounts, the regular creditation of the regular payment of credit interest has not been done. Okay, if that bank usually pays once in 3 months, then there has been a discrepancy, that is it had paid once in 6 months only, once in 9 months only. So that type of incidents were observed by the Reserve Bank of India and that is why this penalty of 61.4 lakhs. See here, you just have to remember the penalty amount imposed on the banks. You don't have to remember the reason because in the banks, they will not ask you, in the banking exams, they will not ask you the reasons. I'm just telling this reason for your knowledge. You don't have to remember. Just remember the amount. That is enough. ICICI Bank 97.8 lakhs. Bank of Baroda 61.4 lakhs. Next is Bank of Maharashtra. Here the penalty amount involved is 31.8 lakhs. This is non-compliance with the KYC. No, that is KYC means know your customer regulations. For that purpose, this 31.8 lakhs. IDBI Bank again 31.8 lakhs. Here is that they had charged higher interest rate on the KCC, that is credit card accounts, Kisan credit card account. A higher interest rate was charged than the actual interest rate and that is why this penalty of 31.8 lakhs. The last one is Axis Bank 29.6 lakhs and here is unauthorized, both the unauthorized and unrelated transaction to the internal accounts. So this is the reason. Just remember the bank and the penalty amount, that is more than enough. You don't have to remember the reasons. Next is an MOU. So IFSCA, that is located in the Gujarat, Gandhinagar, and NISM, that is National Institute of Securities Market. They have signed an MOU. Okay, IFSCA and NISM, they have signed an MOU. So this NISM, it will be the training partner for the IFSCA. So what it will do? So it will provide capacity building. That is capacity building in the sense it will conduct related certificate exams. There are a lot of certificate exams related to finance, right? So those type of certificate exams will be conducted by this NISM. It will also provide a lot of e-learning modules, a lot of quizzes, so that the employees enhancement will also, learning enhancement will also, knowledge enhancement will also happen, and also lot of banking capsules on important topics. So all this will be provided by this NISM. So that is why it is acting as a training partner for capacity building initiative within the IFSC. Remember the two party, IFSCA and the NISM. And NISM will provide all these things to the IFSC. Next, if you see Telangana based Gold Sikka Limited. Remember Telangana based Gold Sikka Limited. It is India's first artificial intelligence powered gold melting ATM. So it is the first AI powered gold melting ATM. So what it will do? So if you see in this ATM, there will not be any manpower for this process. So here if you see, the customer can directly interact with the ATM and purchase gold either through debit card or credit card and also sell his or her gold. So here no human interference is there. Just the ATM and the person who wants to sell his or her gold or buy his or her gold. Okay, this is what this Gold Sikka will do. That is Gold Sikka Limited. It is the first AI powered gold melting ATM. So what is the process to sell the gold? So the customer who wants to sell his or her gold will visit that ATM. and will place that gold in that ATM. And then that ATM will melt the gold, check the purity of the gold. Okay, and then in the ATM, it will be a display, right? So in that, the ATM will tell that okay, the purity is this much. This is the amount you will get depending upon the gold weight and the purity. And if the customer is okay with it, it will click the button OK. The customer has to click the button OK, and automatically that amount will be credited to the customer's account. So this is how it will work. Okay, apart from that, this ATM will also, this gold melting ATM will also check or verify its KYC, that is the Aadhaar card will be taken, and also some other ID proof of the customer will also be taken from the customer, and it will check and verify it, and it will also check it with any, if it has any criminal record. If this Aadhaar card or the PAN card person has any criminal record against him or her, if there is any criminal record, then that gold will be retained by the ATM. Okay, gold will be retained by the ATM. Money will not be dispersed. Gold will not be dispersed to that customer, and automatically the ATM will initiate or will inform the nearest police station, so that okay, there is a criminal record against this person and this person has submitted such gold. Okay, that information will be passed on immediately to the nearby police station. So this is how it ensures that the theft gold is not given as money to the customers. So this is a very new initiative. Remember the initiative, it is in the Telangana based Gold Sikka Limited ATM. The next news is about an appointment. The appointment cabinet committee headed by the Prime Minister had appointed Krishnamurthy Venkata Subramanian, that is KV Subramanian, as the executive director at IMF in November 2022. But now if you see, his term has been terminated by the government of India. No official reason has been stated, and now Parameshwaran Iyer will be replacing him at the IMF. So the Parameshwaran Iyer, the current ED, Executive Director for India at the World Bank, has been appointed as the interim ED to represent India, Bangladesh, Bhutan and Sri Lanka at the IMF. So remember the new ED, Executive Director at IMF, that is Parameshwaran Iyer. He has replaced KV Subramaniam. Remember this, it is very, very important news. Next, let us know some few things about KV Subramaniam. So he has been the 17th Chief Economic Advisor. From 2018 to 2021, he had served as the Chief Economic Advisor, one of the youngest person to have held this role, and also he had served on the expert committees on SEBI and RBI. So this was the previous roles played by KV Subramaniam. So the IMF MD is Kristalina Georgievna, and it is headquartered in Washington DC. It was established in 1944. The next news is Financial Services Institution Bureau, FSIB. If you see this institution, it makes recommendation for the whole-time directors, non-executive chairman of public sector banks, of also public insurance companies. So for that, if you see, it makes recommendation whom to appoint as the whole-time director or the non-executive chairman and all. So now if you see, this Financial Services Institution Bureau has recommended Sanjay Joshi as the chairman and managing director of Oriental Insurance Company Limited. Remember Sanjay Joshi, Oriental Insurance Company Limited, chairman and managing director. So currently if you see Sanjay Joshi, he is the current GM of the UIICL Insurance Company. It is United India Insurance Company Limited, and he has been recommended to be appointed as the chairman and managing director of Oriental Insurance Company Limited. Next news is about the Haryana state. So Haryana government has approved a 3-year Haryana AI development project. So this will be from 2025 to 2028. This is a 3-year-old project, and this will be backed by the World Bank. So World Bank will also provide its financial support from its end. The total outlay of this project is 474 crores. Out of this 474 crores, if you see, the funding pattern is 70:30. That is 70% of the project cost will be taken care by the World Bank and remaining 30% by the Haryana government. This is the funding pattern. Remember the amount, 474 crores. Remember, it is backed by World Bank, and the duration of the project, that is 2025 to 2028. This is an AI development project by the Haryana government. So each and every point over here, it is very, very important. So this project, if you see, it will focus on skill development and workforce transition for over 50,000 professionals in AI, machine learning and data science. So basically, it will provide training for around 50,000 professionals in the artificial intelligence, machine learning, the very evolving areas which is very, very important for the skill development. So it will also look into AI integration into public administration. So if we integrate AI into public administration, the redundant works can be taken care by the AI. So that will also be a part of this project. So Haryana Chief Minister is Nayab Singh Saini. The Governor is Bandharu Datharia. And the capital is Chandigarh. The next is about the retail inflation projection by the State Bank of India. We know that the inflation in India is measured based on an index called CPI, that is Consumer Price Index. So using this index, we measure our retail inflation. So SBI has projected that the Q1 financial year 26, that is April, May and June month, the inflation will be below 3%, which is very desirable number. And core inflation, if you see, it was 3.28% in August 2024 and 3.77% in October 2024. Similarly, even in November to Jan, the range was between 3.5 to 3.7, but it had crossed the 4% in February 2025 and March 2025. So before that, if you see in August, October, November, December, it was well before 4%. That is the core inflation I am talking about. What is core inflation? When you subtract very volatile items, that is the food products and the energy, that is the fuel. The fuel prices and the energy prices, if they are subtracted from the inflation, then you arrive at the core inflation part. So these are very, very volatile, and that is why we calculate something called as core inflation. Okay, and the core inflation, it was well before, below 4% in August to November 2024, but unfortunately it increased to 4.1%, that is more than 4% in February 2025 and March 2025. The nominal GDP, if you see, for financial year 26, it is expected to be between 9% and 9.5%, slightly lower than what it was projected by the union budget, that is 10%. The union budget had projected that the nominal GDP for financial year 26 would be at 10%, but SBI projection is somewhere between 9 and 9.5%. So what is this nominal GDP? It is nothing but the total value of the final goods and services at current prices. Okay, so here if you see, it does not take into account the inflation part. Let me explain this with you. Let me explain this with an example so that it will be easier for you to understand. Say suppose in 2010, there are 10 products that had been manufactured overall in the country. Okay, this is just an example, just an hypothetical example for you to understand what nominal GDP is. Okay, in 2010, say there were 10 products that were manufactured and value of each product was 10 rupees, and so total value of final goods and prices produced at the current price in 2010 was 100 rupees. Okay. This was the GDP at nominal price. Okay, GDP at nominal price in 2010. Now let us move to 2020. Same 10 products were only manufactured, but the cost of it was 50 rupees. Then the total value of goods and services, if you see, it became 500 rupees. So GDP at nominal price, that is at current price, if you see, it became 500. So if you see, the same volume has not been increased. In 2010 also 10 products were only produced. In 2020 also 10 products were only produced. But what changed was the price of the product. From 10 it got increased to 50. And what is this called? This economic term is called as inflation. So if you see, the total value of final goods and services has been increased from 100 to 500 only because of inflation. Only because of the increase of the prices of the products and not because the volume increased. So, the nominal GDP, if you see, it does not take into the inflation part, and that is why the huge difference is there. Real GDP includes the inflation part. Okay, remember, nominal GDP does not consider or does not account the inflation part. but the real GDP accounts the inflation part. That is why if you see the nominal GDP will mostly be higher than the real GDP. So here the nominal GDP are, as per SBI projection is between 9% to 9.5%, whereas Union budget projects 10%. Next is about a card that has been launched by the Kotak Mahindra Bank. The card is called as the Kotak Solitaire Credit Card. Kotak Solitaire Credit Card that has been launched exclusively for the high net individuals. So, eligibility criteria. So, who can avail this card? So, they have to have a minimum total relationship value of 75 lakhs in case if they hold a savings bank account, and in case they hold a current account, the minimum value should be 1 crore. Okay, 75 lakhs for savings bank account and 1 crore for the current account. And if you have this card, you will have unlimited lounge access, and also 1% fuel charge waiver will also be done if the transaction is between 400 and 7,500. And the annual fees for this card is 25,000 plus taxes. So remember the name, it is Kotak Solitaire Credit Card by the Kotak Mahindra Bank. The founder of the Kotak Bank is Uday Kotak. The MD and CEO is Ashok Vaswani, and it is headquartered in Mumbai, Maharashtra. The next news is Razorpay launches India's first AI integrated MCP server for payments. That is India's first model context protocol server for payment gateway. So Razorpay, if you see, it provides various options to the business owners, like payment gateway option is also there. It also provides payment aggregator, and also if you see invoice can also be sent in this Razorpay. Say suppose for an example, you have created a website for a client. Okay, so the client has to pay you some money, right? So you can create the invoice in the Razorpay and transfer the invoice to the customer, and the customer can make the payment via the Razorpay itself. So these are the various services provided by the Razorpay, so that the task of the business people will reduce. The burden of the business people, especially related to the payments, can be reduced. So here, if you see, the Razorpay has introduced India's first model context protocol server for a payment gateway. So here what it does, this will allow the businesses to integrate AI driven systems directly with its payment infrastructure. So we have, if you see, there are a lot of, when you visit a website, say that you have visited some dress website .co.in. So there are a lot of AI chatbot nowadays, right? They will tell what type of cloth you want, what are you interested. So there are a lot of AI chatbot that will assist you in shopping on various other purposes depending upon the website. So here if you see, this MCP server allows the AI assistants to carry out tasks such as creating payment link. Say suppose you tell that I want this product number. Say the dress product number is C101. So the AI chatbot itself directly will create the payment link. You just have to create the payment link and make payment. So this task will make the task very easier. The time consumed here will also be lesser compared to the previous cases. So here if you see the MCP server, it allows the AI assistants to carry out tasks such as creating payment links, initiating refunds. So here also the AI itself will initiate refunds without any manual interventions, and also managing other transactions without the need for the traditional dashboards or the API. So this is what is the purpose of this MCP server. So remember, Razorpay that has only launched this MCP server. These are the two things that you have to remember: Razorpay and MCP server.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.